Good morning, Lisa. We've got a lot of numbers for you here, and it's a better than expected GDP report for the second quarter. This is going to have the Fed changing some of its forecasts, 2.4%, which was what the Atlanta Fed GDP now yesterday said we would see. 1.6% personal consumption. That's down from 4.2% in the final revision to the first quarter GDP. So maybe that gets revised up. Core PCE, the price index, I'm sorry. Let's do price indexes here. 2.2% on the quarter for the headline and 3.8% for the core. Now, jobless claims, if this is at all possible, they are still falling. 221,000 last week, 228,000. Continuing claims, 1,690,000. That's down from 1,749,000. So not as many people getting jobless claims, not as many people filing for initial jobless claims. Durable goods orders come up 4.7% after a 2% gain in the month of May. And capital goods orders, non-defense, ex-air, sort of the core of this, up 0.2%. That's after a 0.5 gain the month before. Shipments were flat during June, which is kind of interesting given the strength that we see in GDP. Lisa, I'll let you check the markets because I'm trying to get the latest GDP numbers and see what the breakdown is and how this all worked out.
Mike, you've had a second to really parse through some of this, and I do want to ask you whether this kind of raises a question about whether the Fed can have its cake and eat it too. Stronger than expected growth, yet when you take a look and you dig under the hood, it looks like the price index came in more than expected. Jobless claims coming in, basically Goldilocks?
I would quote Jay Powell and say I'm reluctant to use that word at this point, but it does suggest the U.S. economy remains strong, retains some strength, even at 5.25% Fed funds rate. The consumer spending was interesting because it falls to 1.6%, but that got revised up twice in the first quarter, so that might be revised higher. Business fixed investment, business spending really jumps. It was negative in the first quarter. It was up 4.9% overall. Non-residential fixed investment, which is kind of business spending, 7.7%, led by structures, up 9.7%. We knew that was happening. And equipment, 10.8%. So businesses went out and spent a lot of money during the month, and that is good news for the overall economy. Looking at the rest of this, I've got to scroll down here to inventories and see what happened with inventories. Let's see if I can find it right here. Not finding it immediately.
Mike, what stands out to you in the details, the fine line items underpinning GDP, underpinning durable goods?
Well, GDP, the interesting thing here is we've seen a couple of months where inventories and trade really affected the numbers, but not in the second quarter. They both subtracted about 0.1% from the overall number. They kind of offset each other. And the real strength was in business spending, up 1%, and consumer spending up 1.1%. So that makes up most of what we saw during the second quarter, and it does suggest strength. Government consumption was up 2.6%. That's down from 5% in the previous quarter. Non-defense spending, which was up 10.5% in this first quarter, was down 1.1%. So not a huge contribution from the government this time. It's consumers and business spending, the C and I part of C plus I plus G plus NX. And in terms of durable goods, it's just overall good news that there is some spending, but it did slow in the capital goods non-defense area. So we'll see what kind of contribution that we get from durable goods when we go into the next month. I think the Fed looks at today's numbers and obviously has to change their forecast for GDP for the year at the September meeting. And the jobless claims numbers just tell the Fed that we're not going to see unemployment start to rise in the near future. So they may have to adjust those as well. And this is the kind of report, I guess, that keeps them on alert, not going to make them make a decision because we're a long way away from September 21st, but keeps them on alert for the possibility of having to raise rates again.